Just want to start with your outlook for the RBI. What's the path ahead?
So outlook for the year, I think the markets, there is some noise around calling the markets frothy. So there are two parts to the market, earnings multiple and the earnings growth. Multiples, I think there is no argument that the multiples don't look cheap. But on the earnings growth side, I think there are a lot of levers which look positive, right? So something like cement growth, power consumption, home sales, etc. I think all these levers which build up to the internal economy, there is some sense of strength around this. Obviously, there is a debate around rural consumption not coming through and urban consumption still at pace. I think that is more of a tailwind for us. Coming ahead, we are hoping that with the whole the rural consumption coming up to pace, so we should see good growth numbers coming to stem.
Yeah, the infrastructure and growth narrative in India is a very strong one, but when you're advising some of your wealthy clients, how does the venture story look? How is the interest there?
Wealth clients, okay, so the interest has been very divergent, honestly. So after the whole inclusion in the bond index, we expected a lot of movement around the G-Sec side of the curve, and which has really happened. So you've seen $14.5 billion coming in, which is the first time after 5 years we've turned net positive on the bond market inclusion and the money coming into India, right? And 70% was there after we got included in the indexes. But strangely, we've seen a lot of interest coming on the private equity side of the markets, be it late stage deals, be it pre-IPO deals, and that's particularly the flavor of a typical bull market. So the question here is how long does it stay? But for now, I think there is just a lot of interest on the private equity and structured debt side of the market.
Yeah, and in terms of venture capital investing, what sort of sectors are they looking at outside of that infrastructure picture? How is the tech story looking? Venture capital typically started with fintechs. Today, people are trying and investing into the new India. Consumer tech, agri-tech, defense is catching up lots because of the whole, India defense theory. And recently, we've read this article where Russia is now importing defense articles from India. So I think from the whole fintech side, people are now moving on to more innovative industry. Consumption and any consumer tech is taking up a lot of space in the venture capitalist mind, and largely because the way India is structured, right? So if there is a demographic dividend and if we have to grow at 8-10% for that matter, there will be still a lot of spends on the consumer discretionary versus typical FMCG products. So new innovative side on the consumption, I think that is taking a lot of consensus and focus from the venture capital investing. In terms of your own family office business, are you finding that there's a lot more competition around these days, and what sorts of new products are you developing?
I think, like I mentioned last time, the pie is only getting bigger, right? So, I mean, if you have to just look at some parameters, and again, this is not the right way to look at it, we're just 3% invested into equity markets, right? India as a whole pie is just 3% of the global GDP, and in India, our focus is just 3 or 4% into the equity market, right? Now, assuming even if it just doubles and not really goes to 10, 15 odd percent, just doubles, the market side is actually doubling in the next 4 to 5 years, right? So there's actually, the pie is very, very big. There is enough space for lots and lots of us to come in and make meaningful difference over here. So competition, I think more than competition, there is a lot of healthy competition that's shaping up the industry.
And are you having any trouble attracting talent?
Yes and no. Of course, India is a talent base. So there is a lot of guys who are now looking at innovative careers around CFA, CA and all. So there's a lot of talent, a lot of educational talent happening. Unfortunately, I think some part of the talent also gets migrated to other countries, right? So that kind of is missed out from the crowd. But there's just a lot of young budding talent, and they're challenging the whole traditional way of looking
looking and doing things. I think that's more interesting, and that's actually you would need in a country like India, which is now looking at more financial independence and financial innovativeness, if I have to say that.
Of course, there is a sizable and very wealthy Indian diaspora around the world as well, including here in Australia. Do you have any strategies to capture some of that business?
So I think keep it simple is what our funda is. You know, a whole lot of people are looking at Indian markets more from the purview of stable governments, from stable equity markets and stable regulations and all. So I think the motto here is keep it simple. The market has a lot of ideations around this. There are a lot of interesting ideas from the private equity side which are now getting listed, which will in some sense broaden the whole horizon of market. I think betting on good managers, betting on good product ideations is what we strongly recommend to all our set of investors. We seldom get into any you know, any structured fancy products. Keep it simple. Keep it simple with a good manager.
All right, and if by keeping it simple, does that mean that you're finding the regulatory environment quite easy to operate in?
I'll say I'm finding it more stable, and the budget, the last budget was the exact example over it. A boring budget is the best budget because then there are no regulatory changes. In some sense, the finance minister signaled that we are stable, right? And that was a complaint that a lot of FIs had on India, right? Where there could be regulatory changes, undefined regulatory changes. I think the motto around the budget was we're stable, we're keeping it simple, and that was more like a quote-unquote invitation to FIs to come and invest in India, because things are going to look more and more stable from your be it regulatory side, be it on the currency side. I think that's a welcome change.